Can you please talk about the opportunities where you are adding and some of the areas you're looking at that you're most excited about going forward?
Every week we have a WIP meeting where we discuss what are the best ideas we're working on at the moment. And this morning, there were a handful of Japanese names that we were looking at and talking about. It's a market we've seen a lot of value in, and we're talking about 3 companies which appear very high quality, but we're at the early stages there. At the same time, there is a US consumer goods company that we are incredibly excited about that's pretty idiosyncratic and not really tied to the rest of the market. And I think maybe that's what we're looking for, and what most of our opportunity set is at the moment, fairly idiosyncratic stocks that aren't actually that tied to everything else that's going on in the world.
Yeah, one of the questions that Aubrey and I were discussing, I don't know if you can tell from my voice, but I'm just recovering from the flu. I've been kind of horizontal for the past week. But just because I'm sick with the flu doesn't mean I don't discuss stocks. So I was just kind of chatting with Aubrey.
Still part of the morning routine.
Absolutely. What else are you going to do? Just second that. But we were talking about kind of what kind of exposures we have in the portfolio right now. What are the scenarios where big tech stocks implode, where are we exposed? If U.S. consumer implodes, where are we exposed? And kind of thinking about the different scenarios and trying to think through the portfolio and what kind of risks are in there and where do we want to... Because one of the things about, I mentioned earlier, the idea that we want to maximize risk-adjusted returns. There are idiosyncratic risks at the company level, and then there are there are collective risks that come from correlation at the portfolio level. And so we're always trying to think, okay, if I'm going to add a name to my portfolio, is it going to add to the collective risk, or is it going to subtract from the total risk of the portfolio? And so, like Aubrey was saying, we're looking for ideas where we think they have this idiosyncratic, almost like a special situation, where we don't need the market to be doing well for them to do well. And we're kind of thinking still about, again, this has been our stance for the past 2 years, downside protection. We are in an environment where we think we want to protect our downside first, and then we think about upside. And the reason that is important in an environment like this is we don't know how long this bubble is going to go on, but eventually bubbles do pop. And when they do, we want to be in a situation to take advantage and buy the things that sell off 80, 90%, 70%, whatever it might be. And that means that we need to have some cash, and we need to have things that don't go down or don't go down as much in that type of environment so that we can deploy capital into them at that point. So that's kind of the way how we think about things in this environment.